All right, this will be a trade recap for Wednesday, January 21st, 2026. Interesting day in the markets. But before we get into the charts, just real quick, I am a student of this gentleman. This is Pat Mitchell. He is a professional day trader, though he originally was in blue collar work, and he has been in the markets for a little over a decade now, and he has built up a incredible process and knowledge base when it comes to learning how to day trade. He runs a service called Trick Trades. He has also put together inside of Trick Trades a program called Size Up, and that's what I do. And it is a structured program for learning how to day trade. You start with a small cash account and you basically build that up with your education, experience, and screen time to eventually hit different milestones and become a full time professional day trader. So if you're interested in something like that, great person, probably one of the highest quality coaches when it comes to day trading out there. If not the highest quality, I don't personally know of any other coaches that I can stand by or say that about. And I've been around a few of them in terms of their services, and nothing even comes close to what Pat offers. So if you're looking for a high quality coach, I cannot recommend him enough. And like I said before, you can find him over at tricktrades.com. He also has a YouTube channel on his own where he posts recaps usually daily. If you want to check that out, you can get a little preview of the kind of information he offers and the quality. And that is just a very, very small amount of the knowledge he possesses. But yeah, definitely check him out. It will be worth your time and effort to go through some of his content and judge for yourself. And with that being said, let's get into the charts. So today, an interesting day. It's looking like we were going to be potentially rounding today, but at the same time, almost like I could have put in another day two continuation to the downside on both SPY and Qs and whatever was going on pre-market and overnight. But as you can see, we kind of reclaimed going into the open, and off of our typical levels that get plotted before the market opens, we were able to get off a few trades today. I took 3 myself. The second and third ones were actually, it was a hedge. So we will go over that one as well. But first, let's see here. Entries up. That was on Qs. So Qs basically opened, kind of pushed through this level. We're looking at short, then pulled back, dumped out down into this level, which we're looking at for potentially long or short. I got close, started in, waited, failed to pay myself on this pop up right here. I should have, but for whatever reason, I didn't. Still trying to figure out why I didn't on that one, because that was more than valid, and given kind of the range on the day, it was more than enough. Came down into the level, quote unquote, properly. Then again, on that reaction, stripped out, started to strip out half there, and then as it was coming up, the other half right there, and didn't want to let it get too close because I figured this would give us a reaction. It was respecting it at the open, so I didn't want to run the risk of it just dumping right back out. Took the money to the bank basically, and waited. Let's see here. So that's the entries right here. And then on the second one, SPY, tried taking SPY short as it was coming up into this level up here. Got that initial trade in resolved. So I pulled the position. Then when it got closer, re-entered for kind of like, again, as if I were still in it for the ad. While at the same time, you notice that Q's was testing support for, again on this one. And that was kind of the odd thing about today is, let's see, if I can pull this up. When we were down here, SPY was actually below the 50-day and the support level, while Q's was above the 100 and playing between these two support levels. So we had this kind of divergence. So it's hard to say which direction the market was going to go since both Q's and SPY weren't in agreement with each other. So that's what happened there. And when I noticed that, I decided to also execute on Q's. So that's kind of what this part right here is the Q's entry. That way, it's one of those things where, as this thing was basically starting to go against me, executed just to kind of balance things out, and then waited and watched. And then when it was getting close to that pre-market high and SPY was moving with Q's, is when it was like, okay, this thing's more than likely going to squeeze up as soon as it breaks over. So the moment it started kind of moving that direction, closed out the SPY position for a loss. That was a red trade overall. Took away that profit right there and small red there. But on the hedge, it covered that loss and then some. In terms of like ratios, what I lost versus what I gained, this is 2 times what was lost. So that worked out appropriately. Was it the best hedge? Uh, Maybe. I'm guessing I get a lot of I probably get a lot of feedback from other perspectives, especially Pat, who is my coach over at Trick Trades. He would probably slap me on the wrist for that one, potentially. But it is what I did in the moment. That's how I was reading it. So it's one of those things where generally hedging, you want it to be a very, very specific setup for that. And this, in hindsight, really wasn't that. Because normally you don't want to say on Q's coming up at this level right here, like you wouldn't take this normally long unless it came up and didn't touch any other resistance before coming back down and confirming that it was going to hold this to then go long versus firing off a quote unquote hedge kind of without that setup. It's one thing where it's, again, in that aspect, definitely was not proper. So I will be learning something from that. Exactly what at this point I'm not entirely sure. Gonna stew on that one a little bit. Sometimes that's what you need to do. So that was the day and a bit interesting. As you can see, as we finished out the rest of the market, came ripping up, tested the 20 on both, pulled back. Pat actually called that and said that would be, again, if he was going to take another trade, that's what he would want to look for, is to rip up into moving averages and take it. But again, when you get past 10:30, mainly I'd say past 10:30, generally you're not looking for take any more trades. Things get really crowded in the market and it's just not necessarily worth it. Especially when you're still building an account. Obviously later down the road, that's way different. When you're a full-time trader, you've got all your shit together and you don't have to worry about doing things. You're still gonna do them properly, but they're ingrained that you're gonna do them properly. You don't have to worry about trying to keep yourself in check. But yeah, that's another day down. Green Day, good stuff. And yeah, hope everyone has a good one. And see you guys tomorrow for the next. If you're interested in getting some coaching, definitely check out Pat's channel over on YouTube as well as his service at tricktrades.com. Phenomenal coach, knows what he's doing, proves it day in, day out, and gets direct to the point. His service is also, comparatively to others that I actually poked around a little bit, very affordable in comparison for what he offers. And if you're skeptical, that's understandable. It's kind of what this industry has bred, especially through social media. Uh, give it a shot for a month, and yeah, highly doubt you'd be disappointed. So if you're going to leave again comments and stuff like that, kind of that he doesn't necessarily get back to you, or he admonishes you, or again you don't know necessarily what you're talking about, like just give the service a shot. I think you'd be pleasantly surprised with what is actually taught by someone who knows what they're doing and has their shit together. That's just my 2 cents on the topic. But yeah, catch you guys later. Have a good one.